Hey, what is going on, team? Welcome back to another edition of the Ask Maddie Show, where we take your guys' comments and questions from all over social media, pick a few of the absolute best ones, and cover them once a week here on YouTube. So glad you guys are here. If you're new with us, make sure you guys subscribe to the channel. We also do a show on Mondays called After Hours. We cover a lot of important crypto news. And of course, we come from cryptocharge.com, guys. That's really where we do the majority of our work. We go live Monday through Friday doing top-down analysis of stocks, crypto, a variety of other things. We have our Discord community where you guys can ask questions. Coin library with full-blown analysis that's updated regularly. Learning center, tons and tons of value. With code YouTube at checkout, you guys get 30 days free plus 50% off any membership. So monthly, that's $49 a month, or for the year, $4.99. So again, great value with 30 days free. Hope you guys check that out. So we got a lot to cover today, guys. Asked about HNT, Helium. You guys asked about API 3, XDC, Proppy. Basically, we're gonna have a full-blown technical analysis session today, which is my favorite thing to do. So that's gonna be the focus of today's show. Without further ado, let's get into it. So we have from Richard P2121. Any chance for some HNT TA? So let's get into that, guys. So again, make sure you guys, when you're using these charts here and you're looking for the most price action, you're going to want to look for the one that says spot crypto and then it says crypto with the TradingView logo next to it. That's going to be the aggregated chart, and it's going to provide the most amount of comprehensive price history. Now, again, it's always good to still check through and make sure you have the best chart. There are rare instances where you will see sometimes a certain exchange will list a little bit more and it's not on the aggregated chart. It's rare, but it does happen. So make sure you guys are aware of that. So let's take a look here at the chart. Again, guys, HNT is a really great fundamental project. Before I get involved with anything, I want to make sure that fundamentally I understand it. It's something proprietary. It's something unique. And HNT is absolutely fits into all of those categories. It is focused on decentralized mesh networks for cellular data. They recently picked up a partnership with AT&T, and we've seen a lot of progress with Nova Labs as far as their buyback of early investor tokens and burning those tokens. Basically, trying to remove supply and showing a lot of faith in the long-term trajectory of the project here. So you guys can see that we have price action that comes all the way back here to June of 2020. So like we've talked about many times, there's a lot of charts that will look really, really great or really, really ugly. And a lot of it just has to do with market timing. If you launch at the very end of a bull run and you just see price capitulate from there, that's really just going to be indicative of risk on environment, the liquidity in the environment, not so much the tech itself. Sometimes it is, but more often than not, it is just good market timing. So Helium on the other side of this, right? Really good market timing. Of course, when you do have that mining aspect available where people can earn HNT tokens, now mobile tokens, you're going to see continuous growth on the network in that respect. And 2021 was a very big cycle. We saw a lot of DPIN come online, started to see that RW narrative pick up a little bit. And we saw really extensive growth in here. We can see that when we use just this minor crashing structure back here for HNT, we're here on the 3-day chart, reached out to just beyond that 34 extension. We saw that the 13 extension was also a big area of interest in here. And you actually wicked that 4.236 in there. So that's not the area of interest that we're using though here. Let's get rid of that because we have price history that's a lot more relevant. When you have a full cycle worth of price history like this, that's the bee's knees. That's where you guys are going to get a little bit more value. And again, anytime you have a bigger range like that, that's going to be a higher quality range. Anytime you're in a higher time frame, higher quality range. So we have, of course, created a crazy downtrend in that bear market. So we reached out to $55, got down to as low as $1.13, so minus 97%. So remember this, guys, when everybody tells you, that you're an idiot for selling into strength and, taking multiple TPs off the table, that downside can be really, really relentless. So we found a strong support level in here. You guys can see that there was a strong resistance level recently here from December of 23 through January of 23. And where that ended up coinciding with was this back in here. So you guys can see there was support back in here. You got contention here. You got the breakdown. And you finally filled it out here. So this is a good example, again, of an imbalance getting filled out. You had a very aggressive breakdown, accumulation, markup, distribution, markdown. And that is just very normal trend behavior. So now that that's been taken out there, one thing that we're watching for here is this level that we're interacting with right now. So we dipped just below it over here on October 19. I turned my DCA and I told my team, hey, I'm DCAing under here under 220 because it's a very aggressive value zone. It's deep value. We saw the cumulative bottom finish out here in 2023 before seeing some impulses higher. So above 220 for me is really a very relatively strong point for HNT. There's, of course, a pivot zone that divides us as well. You guys can see right around that $4 mark is a very big area of interest as well. And this is really what I look at when I'm breaking down charts on macro levels. You don't have to overcomplicate it. You don't have to have a million indicators. These key support levels and resistance levels will tell you a lot about what's available on the table. Now, let's talk a little bit about what that upside potential looks like. And one of the things I'm always watching for when you have price history from a previous cycle is, are there any macro imbalances left behind? So we talked about this imbalance here, and that one was resolved. That's no longer an imbalance that we look to be gap hunted or cleaned out, as sometimes we talk about. But there is an imbalance that got left behind higher up here. And this is an imbalance that I think is worthy of our consideration. That's going to be right on the $20, $22 mark. So we can see that we had these tops over in here. You had a little bit of contention here. You had multiple tests of support in here, and then that breakdown without the retest. So that imbalance remains open here on HNT. So if I measure from current market just into that imbalance, it is roughly a 760% move. So when we talk about, a lot of times when we bring stuff on the show, you guys have seen us probably talk about XRP and Solana and, even Ethereum. And we talk about the ROI, and there is ROI there. And, you look at that ROI and you measure that against TradFi, it's still tremendous. But when you kind of start to look at the crypto realm as a whole, and you look at other projects that have high levels of utility and have these imbalances like this without making new all-time highs, that are offering multiples that are 2 to 3x times what is available in some of the assets we talk about, it's very difficult to look away from that. So that is an area of interest that I absolutely have advised my team to consider taking a trim. You guys can also use this swing high, swing low in here. You get roughly a $90 high there as the next potential logarithmically based target. So from current market to that $90 mark is roughly a 36x opportunity. Last thing I'm going to show you guys as far as where you guys can drag these fibs from. Swing high, swing low off the most recent low. And again, if the new low is set, you'd have to adjust that again in there. But if we were to use this range in here, you guys can see that roughly a more conservative target of roughly 74, 75 is produced as the new high there around the 8 extension, with 16, 25, 34, and 40 as that range in here. So remember that everyone's risk appetite is different. Everyone has different averages, different goals. So you guys can use ranges that are good for your timelines, risk appetite, all of that good stuff in there. And you guys can really create a plan for yourself that's very comprehensive. So I like HNT a lot, something we cover on the show regularly. So if you guys like HNT, check us out at Crypto Charger because we cover it Monday through Friday. Leany Lee Uarner, I don't know, best guess. Still bullish API 3, please. Are you asking me to be bullish, or are you asking me if I am bullish? Either way, yes, I will be bullish for you on API 3. Let's take a look here at API 3. Let's strip this thing down all the way to bare bones here. Let's also quickly take a look here at CoinMarketCap, guys. I want you guys to know where we are market cap wise on some of this stuff. So you guys can see API 3 here. What's the market cap here? $51 million. That is chump change, by the way, guys. 51 million is nothing. When you especially look at some of the big caps out there with XRP that are, billions and billions of dollars now, 51 million is just absolute chump change. And it is one of the biggest reasons when you start to see sub 100 million, sub 200 million market caps, the amount of money required to get that 5, 10, 20x is very little amounts of money. I think that when I start to get, a little bit, disenchanted with analysis that suggests certain price points, it's not the price point itself, it's the market capitalization required and the amount of capital, new capital required in order to make those price targets happen. So when we're talking about a $50 million market cap right now, what's required for a 10x, right? Like $500 million. That's like a very, very small amount of money in the grand scheme of everything. So let's take a look here at the API 3 chart. Again, we're on here on the KuCoin chart. If you get rid of that tether there, you guys can see there is an aggregated chart that goes back a tiny bit further, shows a little bit different data, but nonetheless, the tops in here are the same. So let's strip this down. Let's get naked with the chart and take a look at the analysis here. So we're here on the 3-day chart. Again, on these shows here with you guys, I want to be on a little bit higher time frame so we can see the candlesticks as you guys are with us on our show. Where we get a little bit more nitty gritty. We'll get on other time frames, but today we're here on the 3-day for API 3. So let's take a look at some of the areas of interest here for API 3. And again, API 3 is an oracle, guys. It competes directly with Chainlink, but then again, you look at the market cap of Chainlink and API 3. Big discrepancy there, right? A lot more money is required to get 5, 10x out of Chainlink than it is out of API 3, and API 3 is highly integrated like Chainlink is. Let's go ahead and bring more support and resistance in here. So again, big top in the $8 to $10 region. You guys can see there was a big pivot zone here around 227. We can see that there is support down here around $1. And then we, of course, have our triple bottom that's in play right now around that 50-cent mark. So these are some of the key levels that we're paying attention to here on API 3. Let's go ahead and bring this one in here too. So we'll bring that 340 area of interest. So obviously, again, you look at the timing here, 2020, great market timing. Has nothing to do with the tech. Just like we talked about with a lot of other things that launch at the wrong time, nothing to do with the tech. A lot of times this is good market timing. When you can see this aligns very closely with just a strict reversal point, easy place to look there. So when we see these, tops built in here, here in 2022 gets the breakdown. We retest this over in here, but we don't retest the full imbalance. We build this new support level in here. Over here in February of 24, this is actually when I advised my team to take a trim. Not everyone did. But I took a 20% trim here on API3. The reason I took a trim here in this like $3.50 to $4 region is because I saw there was an imbalance here, the breakdown, and then we were able to resolve that. And then of course we ended up seeing a little bit more downtrend here. I can't help it when Donald Trump comes out and talks about tariffs every other day, or when the international conflict with Israel and Gaza picks up, government shutdown. These are things completely out of our control. But as far as the technicals are concerned, when I saw that retrace, took that reduction, and I have been reaccumulating API3. I have definitely been putting my money where my mouth is and reaccumulating and putting some of those dollars back to work. So we have a relatively balanced chart here. Even when we had this breakdown off of this key level in here, you guys can see that this double top in here has resolved that. Now, when you're looking at this, you're like, well, Matt, that's a pretty aggressive downtrend. Why should I be excited about this? When I see charts that respect this flow of breakdown, support, and resistance, and of course, also been in a relatively like bearish state compared to at least Bitcoin and a lot of other stuff out there, there's a very good likeliness that when the trend is reversed, that we're going to see that continued respect on the other side of the trade as well, and potentially see some really, really aggressive highs set in for API3, and being able to potentially even capitalize on the breakout backtest behavior because of the behavior that we see in assets like this. Zcash also behaves in this way where it's a little bit spicy and it gets a little bit of that wild child in it, but when it does that backtest, my God, does it do a violent and consistent backtest. So let's go ahead and get rid of all of this here. We've done our zone markings here. We've noticed that there's no major imbalances left behind. So we can bring two different fib ranges, right? We can bring from the cycle high here or from the February high here. I'm not going to use that scam wick. I'm just going to use that low over here. We get $7, $12, $16, and $19 as those areas of interest. And again, are these reasonable? Yeah, of course they are, because we have a $50 million market cap right now. I'd be at 12x to the $7, $8 mark, to the $13 mark at 20x, to the $16 mark at 27x, and upwards of over a 30x to that 4.236. Interestingly enough, let's bring in the ultimate high here and go to the same low that we selected previously. We can see that there is confluence there around the $16 mark, which is our TP1 here for API3. Again, you guys can choose plans that are good for you, your risk appetite, your goals. You guys can look at those multiples and decide what's good for you. But we approach our TPs through a multi-step TP. We never do everything at one TP. With Zcash, I recommended everyone took at least 35%. Some people took more, some people took less. But we want to make sure that we're covering our initial investment plus some profit. So with API3 at $16, you should be more than recovering your initial investment and taking quite a bit off the table. And then TPs 2 and 3, you guys can manage a little bit differently. But TP1 should be very aggressive, 35 to 50%. Check out the Consistent Investor Strategy on our website, guys. It's a 50-minute video that covers absolutely everything from allocation of different types of verticals, 8 different ways that we get into the market based on what market conditions are providing, long-term holds. Very comprehensive. You guys can check that out for free with code YouTube for that 30-day free trial. FIA25. Great content as always. Much appreciated. Thank you. Can you do technical analysis on ICP token? The community has some questionable behavior in the past, but technical-wise, it's a good long-term investment. Took the words out of my mouth. I know that there was a lot of evidence of insider trading in the early days there. There's obviously been that initial dumping is probably done. So again, if it's something that you feel passionate about and you like the technology and you like the roadmap of where they're at, then it really comes down to price for you. So let's go ahead and take a look at that. We'll pull up ICP. Internet Computer Protocol. And we'll go to the aggregated chart here again, and we're going to strip this down. As you guys can see, there's a lot of charts here of assets I don't own. And you're probably wondering why they're marked up. And that's because every Friday we do Technical Tune-Up Friday on our website, where you guys can bring 2 of your own picks. They get featured on the site, and we do a full technical breakdown, stocks, crypto, anything you guys like. So pretty familiar here with the ICP chart. Let's break it down together. We've had a great resurgence here in the last few days. My God, you really dug down to there in the lows. Again, you guys see that scam wick here from the liquidation event, came down to $1.77. So you guys are probably looking at it, they're like, I don't see that wick on my chart. It's the aggregated chart. That's what you guys are looking for there. Aggregated charts are going to show those full liquidation wicks, and my God, are they mischievous. So you guys can see that the double bottom, though, came in literally at the low here from September of 2023. So nice resurgence in there. Let's go ahead and mark up this area as well, so that we kind of have like a bottom band to our support there. We're well above 350 as well. That's good to see. Let's mark up some of the key resistances, and then I'll get more nitty gritty with some of the down here. So you guys can see that these are some of the other key levels that we identified here. So you had the top over in here, the top here coincides with the final bounce in here before those down candles. This, once again, like we talked about previously, resolved the imbalance that was created there. taking that out, and then having permission to move a little bit lower there. So this would have been the higher low you want to see set in. Until you reclaim 722 short term, you are still on the bearish side of things. You are back in a deep accumulative pocket. This is looking like a double bottom right now, but back above 722 is where ICP starts to flourish again, and people can start saying, yeah, there's clear bullish continuation. You need to see that breakout, that back test, and then moves higher. That would also be a reclaim of the 50-week moving average, and also pretty close to that 200-week here. And you are trying to reclaim above the short-term MAs. So again, back here on the daily, seeing a little bit of that momentum back off when you do see those huge impulses like that. It's not abnormal to see that, which again is why we've been de-risking out of Zcash a bit here. Although I think we can go higher, there is a very good likeliness that you see a little bit of selling occur after overextension. So I'm going to get rid of this here though, and let's look at the last level here that I want to see kind of hold short term. So this 445 level is also pretty important to the market. You guys can see there was a bounce back here. There was bounces here, resistance here, support bounces in here. We broke below that, big no-no, right? Found support at the previous double bottom, creating a double bottom, and now we're holding above it. So this needs to hold. This short term is your line in the sand. Above 450 opens up the potential momentum to start testing the 750 and beyond figures. Let's look at a couple other things here, guys. I don't want to spend too much time on any single chart today. Make sure we get a little bit of love across the board. There's a little bit of bounce here around the $28 mark. There's also a little bounce here around the $40 mark. I hope you guys see why that happens right here. Then also this, neither of those have been fully resolved. This was a pretty good breakdown backtest in here, but I think that we could probably dig a little bit deeper up into that previous level. So if I was watching for imbalances, that's my area of interest I'd be watching for. It'd be roughly 28 to 40, and that's roughly a 4 to maybe a 7x from current market to those levels of interest. Now, Fibonacci-wise, you can use this high up in here, or you can use the high that was set over in here. So let's go from the more local. It gives us 32 to 79. If we use the ultimate high over in here to the low that was set, we do have a little bit overlap here. That's going to be right around the $68 mark. We see two Fibonacci figures there. The $32 to $34 mark is also relatively heavily supported. And then beyond, more extension based, 137 to 147 is those areas of interest. So again, picking a plan that's good for you, your risk appetite. I always encourage you guys, when there is a really good multiple on the table and a trim or an imbalance is there on the table, consider making that part of the plan. It doesn't have to be huge, but when you have those trims that are available, 10, 15, 20% can make a very big impact in what you're available to do. Maybe it's rotating back into ACP if we were to get a big pullback into one of those previous resistance levels, or maybe there's another opportunity that's still lagging behind. It's always better to recompound into laggards than it is to, try to go for the trophy of holding everything the longest. Atlantic Living, hey, I appreciate you coming on the lives. I've been seeing you on our TikTok lives recently as well. Appreciate all the love and support over there. Maddie, could you please provide your analysis on Telcoin and Proppy? Please be candid if they show good ROI. Thank you. Absolutely. And I'm always going to be candid with you guys. That's my number one thing. A lot of people who claim to be educators and analysts will hide when the market gets bearish or tough. And that's something we don't do. We go live Monday through Friday, no matter rain or shine. So let's go ahead and take a look at those two. And you know what? Let's do a little two panel here. Let's do a little side by side. And maybe we'll keep it a little bit more high level here. So on the left side, let's go with Telcoin. That's the spot. And then we're going to go with Proppy on the right. So honestly, I really cannot off the top of my head remember the fundamental use case for Telcoin. Here it is, Proppy. Proppy is just pro USD. But Proppy is a real estate focused blockchain service. So they originally were, trying to create a little bit of like an educational program. I don't know if they still have it there. They've kind of pivoted to a little bit more of like a software as a service, which I think is a very, very smart thing to do. As far as like customer facing solutions, that's really what we're looking for long term, is more SaaS, involvement. But Proppy has definitely been a leader in the space as far as that's concerned. Natalia, I can't remember her last name, but she's done a lot of great interviews on YouTube talking about how the space is going to evolve. I think there's a lot of regulatory framework that needs to come into play when it comes to tokenizing things like real estate on blockchain, because there's a lot of moving parts. We know that there's a cohort of homes in New Jersey that are going to be tokenized on the Avalanche blockchain, and I'm excited to see more test pilots like that. But I digress. We're not getting deep into fundamentals. We're going to do some TA, but I'm a little bit more knowledgeable about Proppy because I went through one of their courses a long time ago just to kind of see what was out there. So let's go ahead and get out to maybe the weekly chart here. I think that's probably the move, and then we'll also get out to the weekly chart here on Proppy, and let's talk about what's going on. You guys can see again, even though I don't own Telcoin, there's TA over there because get a lot of requests, guys. I really stick to it. Let's go ahead and take a look here at Telcoin first. So one of the things I do like here, especially on the weekly chart, is there's a very clean uptrend that's been intact here. Of course, you can see little deviations, but looking left to right from August of 23 forward, there's been a pretty clean uptrend. In fact, maybe even a ascending channel here that's been in play for quite some time. Of course, that last little big push that we had recently was quite aggressive. We did find a bounce in a spot that I think is important. So we had the tops over here on the weekly tops, and we just showed a really, really big spot of buy demand off that level. Now, just because you see a single bounce doesn't mean that's up and away forever, but it is something to consider as like buy demand stepping in the right spot. That's what you want to. That's what you want to see. Currently above the 200-week moving average. One of the things that we're watching for here on Tel is that there is not an imbalance. That's one of the things that we watch for is this breakdown here. You guys can see over here, this was resolved in February of this year. That's what we saw in a lot of alts, and a lot of people thought when we saw it came for that correction, yeah, it was definitely short to midterm bearish for a lot of alts, but that resolution of that imbalance doesn't mean just guarantee continued downtrend. A lot of times we're grabbing and retrieving trapped liquidity, coming back to set a higher low. Sometimes that higher low is a lot deeper than we want it to be, but you still have the permission to continue an uptrend from there. Breaking over the 1.2 cent area here for Telcoin obviously is going to open up a lot more to the upside, but it doesn't have this big gap where there's this like, let's say we're down here at support or underneath this accumulation and there's this resistance up here. This is a clear trade that I'm always looking for. That's not present here, but that doesn't mean it's not a good opportunity. If we break all this down, and let's go ahead and bring our fib here. Let's go from that swing high to that swing low. We are below the 236, which technically means we're still in good accumulation zone, like long-term accumulation. You're still sitting pretty close to support here. If I were to be picky, let's call it 0.003 would be the entry. And you see 10 cents up here as that first extension-based target. Remember too, team, if you see these extensions in here and maybe you see it coinciding with the resistance level and you see the multiple of what the reward is, it's okay to also do a little trim there. You don't have to use extensions, but logarithmic growth is a great way to look for new all-time highs. Roughly almost a 28x up into that 1.618 area from current market. So I think it's still a good value. I like that there's been a clean uptrend in here. Overall, I think Telcoin provides decent upside. Fundamentally, I would definitely need to be more educated to say, you know what, I think this is competitive and I like what they're doing here. But from a technical perspective, that's what we got going on here. Let's move over to Proppy on the right side of our screen here. And let's maybe take this down to a 2 week just because we have a little bit more data to work with here. And you know what, let's make Telcoin a little smaller. We can deal with that. We've already worked through that one here. Let's go ahead and get on this. Cool. So again, over here in 2017, good market timing, bear market, bad market timing, right? So initially everyone thinks they're a genius, ends up being the end of the bull run, back down into the bear. You actually here on the weekly create like this inverse head and shoulder structure that breaks higher, pulls back out of the neckline, creates that last impulsive move higher. Recently though, if you look at even here in 23, that's a pretty significant higher low that was created. So you created the low here in 2019 and you've created a higher low over here. In fact, this is even a higher low over here as well. You've created a pretty good series of higher lows. Now it definitely looks a little different than Telcoin, but here on the 2 week chart, you've been seeing some pretty consistent growth as a whole. Let's go ahead and break that down and let's go ahead and grab a few S&R zones in here. So you guys can see that was a clear flip in there. That's a big area of interest. And again, here on the 2 week, it's probably a little bit different than it is on the daily, but nonetheless, these are still key levels. Higher the time frame, the more valuable the level. As you come down to the daily, I promise you these levels will be just as valuable. You'll find smaller levels in between them, but these will still be evergreen as far as value. Where are we currently? We found a nice support bounce back here in March. Currently sitting on this level here, looking at the 2 week chart, you guys can see that really the big gap, though, the big discrepancy is if we don't hold that key support, we are looking around 26 cents as that next big area of interest. Now, we've been seeing Bitcoin hold in the low 100s. It's obviously a little bit of a spicy time right now because if we kind of don't hold Bitcoin current market, that kind of opens up the risk of 92K as that next big area of interest. Now, I am of the belief that we could still create that higher low and be in a long-term macro cycle-based uptrend. Lots of different opinions up there, but I always take things level by level and I want us to just be aware of where that next value zone lies. So you're currently sitting on top of a support level that's mattered in the past, especially back here in 22 through 23. But if this level doesn't hold, you are looking at 26 cents as that next big area of interest. For Telcoin, that'd be the equivalent of like 1.8 cents if that current level here doesn't hold that we saw that very intense buy demand step in off of. So let's go ahead and grab the swing high, swing low in here off the more current. Actually, let's strip this down and do that really quick. Boom, that in there. That gives us 650 to maybe 17 as those next big areas of interest using the more recent 2021 through 2023, which would be upwards of maybe a 12 to 33x, pretty crazy reward in there potentially. We can, of course, use this over here as well. We can use the previous crash in here because we haven't preached a new high yet. although this isn't as liquid of a high. That gives you $10 to $26 as your areas of interest. So again, know definitely a little bit more about Proppy. It's been a while since I've done a full refresh on them, but a little bit more in depth with what they're doing out here. I think it's a great consideration of like just niche vertical to add to your portfolio, considering there's not a lot of real estate specific DLT solutions out there right now. And I think it's an overall good ROI. So if I had to pick one, again, just probably a little bit biased because I know more about Proppy, I'd go with Proppy in this instance. But Telcoin is still offering really good overall technical sentiment. Cool. We're going to do simple water. We're going to go to one more question here. This is a long Ask Matty show. If you guys like the longer shows, let me know. Or if you guys need me to shut up sooner, also let me know. We're going to go with George Ibrahim 7945. You know what? I'm not going to do numbers anymore. If you guys have numbers in your name, no more numbers. Can you guys please do TA on XDC? It's an ISO 2022 token. And apparently banks have adopt ISO protocol come November 22nd of this year. So let's back up really quick here. So ISO 2022 is just the messaging standard that Swift runs over. It is basically just a rule book. And it's kind of no different than any token standard, right? There's a set of rules on token creation, token transfers, clawbacks, reversals, things like that, right? There's just a clear set of rules across the board, no matter who wants to participate. Swift is no different. So when we say something is ISO 2022 compliant, what that means is it is compliant with the existing messaging standards that Swift already adheres to, okay? And there's lots of tokens that do that. So it's a positive thing to have, but it's not necessarily something that I think is like, oh, it's ISO 2020 compliant. That means that every bank is going to start using it. That's not what that means at all. There's lots of things that have certain security settings, right, or security features, but that doesn't mean that that piece of hardware or that piece of software is the best application for whatever we're talking about, all right? So again, here, not talking about XDC. I just see that being a huge talking piece that people really grossly misunderstand. Let's go ahead and take a look at XDC. So let's pull it up here. Let's look at the spot and let's take a look at the chart. So strip this down. Let's do it together as a team. So what do we have here on launch? And maybe we can come down to a little more data because we're not doing the comparison. Maybe we'll go 3-day again. I think that's the move for today. Yeah, let's go 3-day. That's great. So one thing you guys are going to see here, and this is not always present on other charts, is all of these insane wicks that just seem to come out of nowhere. On aggregated charts, you sometimes see this kind of stuff. You can generally ignore a lot of this kind of wicking that you see on the aggregated charts that's not present on other charts. So just things to consider when you guys are looking at things that are not exchange-based. Or if you see low liquid exchanges, meaning that they have very low volume, sometimes you'll see that behavior as well. XCC had a clear support level that came in, launched back here in June of 21. Genius timing, bad timing. It is what it is. 1, 2, 3 tests of key support in there, rally higher, come back for another test here in August of 2024. We can see that there's another level in here that's quite important to the market. We had support back here in 21, bounce over here, resistance here, key support in here, breakdown, broke higher. In fact, one thing that we should be watching for here, and we're quite close to doing it, is because we interacted with this level so many times and we broke back below it over here in April and May. Here, you guys can see in November, we just broke higher and we didn't backtest it. So I would say that if you were to set a limit, I would look at 4.5 cents as my area of interest. If that's not the absolute key support, I'd be watching for this as that next like minor band around 3.5, but anywhere in this pocket is a likely bounce area. So we're very close to doing that. This would also technically resolve an imbalance. Of course, it's never fun to see certain alts maybe crushing new lows or back at their triple bottom lows, but sometimes this gives an opportunity for certain alts to create that higher low and resolve imbalances that actually create more fuel to move higher. When you solve imbalances and you do that backtest behavior, there are more orders in those blocks and it creates more long-term volume. So when you see the breakout no backtest, you should actually be rooting for the backtest because it creates a bigger, more volatile reaction more often than not. Let's go ahead and take a look here at a couple more levels, and then we'll go ahead and do our Fibonacci and close out the show for today. Up here, and then there's like that there. Okay, so these are the main SNR levels. This is again something we teach you on our website. We have a 4-part mini series on technical analysis, TradingView 101, showing how to set up everything the way that we set it up and the important buttons. We have support and resistance training, Fibonacci setup, and then we also have continuation reversal structures. Those are really the main things that you guys need to use to be able to be making decisions on high time frames, and it just comes down to practice. So we have a pretty good roadmap here. We know that this level, the 6.7 cent level, is a level that needs to be reclaimed. We were showing short-term momentum there. Obviously, that momentum was lost here in the middle of October. So getting back above that is going to be important for us to maintain that momentum here. Short-term, we're looking at 4.5 cents to maybe 3.5 cents as those areas of interest. So let's get rid of all of this here. Let's go from the ultimate high to the low in here. We came in for a full 786 retrace. We're below the 236 right now, which technically puts us in macro accumulation zone per the consistent investor strategy from current market, or let's go from at least the value zone that we talked about there, would be maybe a 5-6x to that 1.618 using the ultimate swing high, ultimate swing low. We can, of course, also use this range in here because it's a pretty good size range in here and see if there's any overlap in those areas of interest. So we can see here that the 19 to 20 cent region is valuable, and then we kind of get like 28 to 32 as values up here as well. And I don't want you guys to get lost in minutia and feel like you need to do a cluster on everything. If you see a very clear range and you look at those targets, and those targets make sense with kind of market capitalization and what we've seen historically with certain assets, it's a good area of interest to consider. But please always make sure you're doing a multi-step exit, multi-step TP, and scaling out. That's all I have for you guys today. It was a huge session today. I really enjoyed doing this TA with you guys. If you guys have questions on what we talked about, first, if you want to answer quickly, get in the Discord for that. But please leave your questions below. We'll be back again on Monday with after hours, and of course later this week at cryptocharge.com. Hope to see you guys there and in the Discord.